Oh, yeah. Happy Wednesday. What is it, Wednesday? It's Wednesday. Welcome to Get Technical. I'm your host, Neil Hamilton. How's everybody doing? Give me a 1 in the chat if you're doing nicely. This is the show where we talk about stocks from a technical perspective. Sometimes we have on guests, sometimes we don't. Sometimes we have a Wild Spencer Israel appearing, sometimes we don't. You see him get ready for it? Got him. Guys, if you have any problems, any concerns, if I offend you on a personal level, email powerhour@benzinga.com and we'll send you swag. If we offend you or your family, we will send you a t-shirt, a mug, any number of items just to make things right. It's a corporate way. Anyways, guys, I was just talking to Spencer Israel, man. Casper mattresses, one of which I am the owner of. I gotta say, it's a good mattress, but no moat around the business. Getting absolutely chopped up like Philly cheesesteak. But then look at Sleep Number. So get Casper out of your mind. Let's look at one that should maybe be moving in sympathy, but is not. Sleep Number mattresses. Snumber is the ticker there. Getting rid of our indicators, looking at nothing but price. Getting rid of this little line that I drew. Yeah, that was the line where I said if it breaks above this with a solid body candle, buy it. Let me know if you got in. Hey, Leah. I feel exactly the same way. Ashley, what is up? Do you guys see me drink this whole cup of water? If we get this video to 100 likes, I will fill this entire cup up with water and drink it in one thing. I'll chug it. All right, so there you go. 100 likes. That's what it gets you around here.
Hector, you can't throw those lyrics out there. My song. That's copyrighted. So
Hold on. We have the rights to it, so let's hear it.
I want to get technical. Want to get technical with Neil and AB
and producer AB. All right, that's the vibe, guys. That's the vibe. Don't overdose, Neil. Chill. Hey, I'm feeling dehydrated, guys.
I don't think you can overdose on ginger chews.
On ginger chews, those go right to your hips, folks. I'm telling you, love them, but then you go right to the old love handles. Sleep Number. What do we got? Let me get one of these. Boom! Butt cheek touches the bottom. Butt cheek touches the bottom. It says bounce off that double bottom, guys. Perfectly symmetrical, beautiful. We've got the meat of the trading here lining up really well with the support here. Right before this gap down, and I drew this yellow line last time Sleep Number was on the show. And what I say, if we get a solid body candle break above this line, go long. Go long. This is my smoking song. It's not very long, but guaranteed to get the job done. Smoke one. That was a big song for me when I was in high school, and I smoked a lot of weed, which I don't do anymore as often. Yeah, so check it out. This thing is breaking out, going long. Where's it going to stop, though, is the question. My humble opinion is that it's going to stop right at the support level. But let's pull up the old volume profile and see where the shares are held, where the buyers be. Whoops. Got that. And then where is it? It has a weird name. VP. Volume profile, volume. I don't know what VPVR stands for. If we got to get him on the phone. We can get Pierce on the phone and figure out what this little initialism is. That would be fantastic. At any rate, look at the shelf. We see the shelf right here. This is where we are going to hit our bump in the road. Ooh, And look at that. That's lining up exactly with resistance here on the double V. I just described your channel. What did you say, Aquarius?
That was close.
Wait, where's the comment?
What?
Did you delete? Wait, Aquarius. Oh, wait. I thought that Aquarius had said something previously.
No. Oh, I was talking to Hector about the get tech. So I was joking because we do this. I have a song that we do sometimes that you heard a snippet of. And I thought you were reciting lyrics to it, but now Hector's saying, "Wait a sec, you guys don't know the
No. He just doesn't want the Benzinga lawyers to go after him. That's it. He's trying to. He knows that we'll lawyer up. If you guys start stealing our intellectual property, we're gonna come after you. All right.
There's no pun of the show, the name. I mean, it's get technical because we like to find technical reasons about computers, technology.
Yep. I think that people get it, and you're exactly right, Aaron. That is where we came up with the name for the show. Also, big shout out to Jake W.
Jake W.
Jake W.
Get it right or don't say it at all.
And his evangelism for the volume profile or volume by price tool. Also, did you know he had a kid recently?
Yeah, I think it was like yesterday afternoon.
Yesterday afternoon, that's right. Yeah, and he was still charting, still doing the volume profile thing.
Wow. You know what I think is really cool? He calls on the volume profile when he sees like a gap like that. He calls it a launch pad.
Really?
Yeah.
So like if a stock breaks above this kind of level, you're telling me that it's going to go up until it hits another shelfie shape?
Yeah, I mean, well, he calls it a launch pad, which I just think is cool because it makes me think of like rockets and cool things. You know?
Yeah, I think that anytime that you're ascribing the laws of physics to price on chart, you're in good shape. That's a big sarcastic. Don't do that. Stocks don't have inertia or momentum. All right. So yeah, that is the sleep number, guys. If we get this video up to 100 likes, here's what we're going to do. Number one is I will fill this entire cup up with quality Detroit tap water, and I will chug it. I'll chug it right in front of you for the views. Also, see that plant up there? I'm not afraid to throw in a little spit.
Are we not supposed to be drinking tap water here?
Don't worry about that. You're not supposed to talk about that.
Okay.
So yeah, there you go, guys. If you want to see some really exciting action between me and that dead plant over there, get those likes up. We're gonna get weird. Yes, it's a cryptomaniac. That's gross. Yeah, whatever, man. Okay, so this is sleep number. My price target for sleep number. I think it's gonna still hit this level as resistance, but I mean, you can see it in the charts. The charts tell you what it's gonna do. Get up to 121, 122 on this nice double bottom breakout. Beautiful, beautiful stuff. Let's look at it on the weekly. Yeah, yeah. Look, it's perfect. Look at that. Red candle, green candle. Red candle, green candle. It's just gorgeous. Exactly what you want to see in those movements. All right. So what? I feel like I saw some yeah, Aquarius. Do it right now. Just don't listen. Just kind of put your face next to the screen and just kind of right past that subscribe button. Just go. Don't smash it. Just like that. Just make sure it clicks. Can you look into IWM?
You want to see something cool, Neil?
Sure.
New?
What? Does that help?
I don't know. Time will tell.
All right, here's we're looking at IWM. So we had Sylvia Bellrock on the show yesterday. Absolutely fantastic technical trader of stocks and futures. She brought up something that was very wonderful, which is that IWM is often a leading indicator for strength or weakness in the Qs and in SPY, or in other words, the other major indices of the markets. What I have here is the technical trader Swiss Army knife, the Fibonacci retracement tool, anchored to the high of 07 when it pivoted, right before it pivoted into a downtrend. And then the second anchor is March of 09 when we pivoted into a long-term sustained upward trend. And what we can see here is that once we got to the 2.68 level on here, we just couldn't break this for a period of over a year. All right. And then when we finally broke out of it, we gapped up, we found support on it, and then we rode up very, very, very quickly. Look, this is like absolute parabolic movement on IWM, which is the Russell 2000 ETF. So smaller companies here. So more volatile, but more growth over time is sort of the marketing language there on this ETF, on this index. So at any rate, you can see that we've gotten up to 3.618 and have really just been in Chop City right here. Chop City. What I will say is that it doesn't look like a strict rounding top. It doesn't look like a head and shoulders. It doesn't look like any textbook sort of top or sign that like the end times are coming. But it is not in any discernible trend. This is what we call a choppy mess. All right, so that means it's anyone's game. It's anyone's game here on IWM. What you can do is anchor a support line like this, and then look to that as some indication that if we break down through this support line that goes back to the 4th of March of this year, something like this maybe, then we're really losing that sloping line of support. But Chop City, which is a completely neutral sign for the rest of the market. We shall see. We shall see. What platform am I using for the charts? I use TradingView for the charts. TradingView is also available in Benzinga Pro, where you can get all of your news alerts and everything that you need to conduct your due diligence on any stock and most cryptocurrencies.
Shout out Pierce.
Okay, so what is next? Shout out Pierce for that one. What's next? What other tickers are we looking at? MDLA. It's the daily. Okay.
Okay.
That was cool, Aaron.
That was my Cardi B.
Yeah, Cardi B.
I wonder what she's trading right now.
Gosh, yeah, that's a good question. I often wonder what Cardi B is doing right now. You should check on Twitter. Producer AB, check Twitter, find out what Cardi B is doing right now, and then give us an update.
All right. Should I just tweet at her from the Benzinga account and ask her if she wants to come on the show?
You have my permission, yes. Yes, please. I think you're going to want to watch for a breakdown past this support level at $31.18. After which you might get a resolution of this little head and shoulders pattern that you got, which is going to take you right down. So what I just did here, this is MDLA. This was requested by JR. So this is the daily chart. And I just identified that we had a swing high, a swing low, a higher swing high, the swing low to the same level, which in this case comprises what you would call the neckline. and then another attempt at breaking up. Couldn't quite get to that previous level, and then again holding support right here. So then I drew a blue line here to identify or make it easier to see the neckline on what could be a head and shoulders pattern. And we see that it's previous resistance. It's meaningful all throughout the history of this asset. Let's go ahead and just go back. Important level. So now what you're watching for is if breaks past this neckline in a meaningful way with a red candle body closed below it, you're going to measure, I'm using my ruler tool, you're going to measure the height of the head part of the head and shoulders, which is the center swing high, down to the neckline. So that I'm going to use the middle line on my ruler tool to do that. And then that makes the neckline to the head of the head and shoulders equidistant to the neckline and the neck support level that you would expect this to resolve down to, break it down to. And then since we've got that here, we'll just go ahead and mark that. And you can see that that pretty much perfectly lines up with our support level here, as well as this volume shelf. So my educated forecast on this, based just on price structure, is that it will break down likely, as a high likelihood, upon a breakdown past this neckline, that will get down here. But then you also bring in the volume profile and note that there's a liquidity gap right here. So that's free fall city. Just like it shot up like this on this green candle, you're going to have a similar thing on the other side. And then we also have downward momentum on one of our momentum indicators, the RSI. And we have volume drying up. I'm short MDLA. Not actually short. I don't have any holdings in it whatsoever, but my perspective is short.
They are bearish.
I'm bearish on it. Do DraftKings. Let's do it. So DraftKings, just to get the state of the union here, DraftKings really liked during these periods here. These are summer months of 2020, and then first months of the first quarter of 2021. We've got these nice channels, just great for pretty much any type of trading. But then overall, let's delete all the drawings. Let's switch to away from a candle and just look at it like a line chart. There's a little more textbook. Upward trend stops here in a downward trend. So DraftKings is still in a downward trend. It needs to show us higher highs, higher lows to show that it's reversing out of that. But broadly speaking, we are in an intermediate term downward trend on DraftKings. I'm looking at the daily chart. It's just a basic line chart, so you can see the essence of the shape, just the closing prices. All right, so switching back to candles, deleting my drawings once again. Whoops. Now the question is there an opportunity to go long? Is there an opportunity to go to short with some degree of confidence that you would actually risk a portion of your portfolio on it? I don't really like where DraftKings is right now, just because it's not presenting to me a price structure that I really get. So if I were to try to draw something on it, it might be something like that. Maybe a little something like that. You can say it's some kind of wedge or something like that. Meh. Momentum going down. Drying up volume. Nothing really interesting there. Let's pull out our moving averages and see if we can get another perspective. So there's three things going on here. Number one, if you see the red bar right here on my chart, that's just an indicator that I have on my chart that tells me that the 50-day moving average has crossed down below the 200-day simple moving average. And that's what we call a death cross. If I open up my tool here, you can see it. It says if there's a death cross, put red line. And then if
Apparently
I turn
Tesla's approaching a death cross. Sorry.
you're no, all good, all good. And then you can see here that the 50 is really hard to see because it's bright yellow. I'll turn it to like green. I'll change the thickness. But you can see right where the green line is crossing below that red line. Investors notice this. Investors see this. This is a sign that this is a stock that is in a weak state. Pretty much just confirms downward trend. The other two things that we have on the moving averages are the 10-week moving average, which is the thick purple line, and the 65-day exponential moving average. We're below both of those, and we've had a pretty good time holding these during this short-term upward trend. You can see it's just bouncing off the 10-week moving average, but right now we're just not in a good position. A cross above these lines would be a good indication, but ultimately for the stock to be in an upward trend, you want higher highs, higher lows, and then to get the attention of all those more old school investors, which still comprise a large body of our market structure, the buyers and sellers on the retail and institutional side. To get their attention, you're going to want to get that golden cross, which is going to be when the 50-day crosses back above the 200-day moving average. So right now, DraftKings is in a very bearish position for swing traders and investors. Do you think DraftKings could be cyclical? Summer months aren't great for sports betting. Tiny Pie asks. Yeah, totally. Yeah, totally. If we switch to Weird Song, I'm going to catch it before it does the baby voice. All right. Yeah, I mean, you could even look for. So once I switch to the weekly here, Tiny Pie going to get the shout out here. You could look for another touch at like about this level before we start getting any meaningful return to an upward trend. Absolutely. You want to look at Apple? We haven't looked at Apple in a really long time. We've turned our backs on the FANG companies. I'm bored with them.
I thought maybe you did it on purpose. Sorry, Spencer was yelling at me.
Yeah, I mean, Apple had this nice little bullpen and it broke out. Let's see if my price target would have been spot on. So, drew a bull pennant on Apple, which is coming out of this pole, and then this pivot, which it comprises our swing high, and then this pivot, which comprises our swing low, making our pennant shape. We're measuring the distance between the swing high and that swing low now, and we're adding that to the breakout point. So price target for Apple, of course, being mindful of momentum over here on the RSI. You don't want to chase. You don't want to buy into something when it's already overbought, which is the situation here. RSI already in overbought territory. So for a swing and investment perspective, it's not the best time to enter. I'm not saying that if you buy and hold it for the next 2 or 3 years, you won't make money. In all likelihood, you will. Just based on the sense of technical analysis, why would you buy when it's already overbought? It's probably going to pull back. But the price target for the breakout on this bull pennant, which has occurred on a lot of strength, is about 163.94. And again, that's just taking the difference between the swing high and the swing low and then adding it to the breakout point. Now, if you want to get aggressive, and these things tend to show up one way or another, like the price for this might go like this, right? But it will reach its destination. A lot of folks are like, well, it didn't go straight up right to the thing, so I guess technical analysis might as well just roll the dice. Not the case. What you can do here is also measure the pull. So we're looking at a weekly, so that's actually okay. If you want to get real aggressive, you can go to when this upward trend started and then add this height, this difference between prices, not to the breakout point, but to the apex, which is where your two lines here converge on your bull pennant. And that's where you're setting an aggressive, much longer term target of 222 and some change. Neil, how did you learn how to read charts? I had some good textbooks, and I've worked at Benzinga long enough to just be around people like Dennis Dick and Joel Elconin, and just working at Benzinga, I'm around the best traders in the world. and you just pick stuff up. But textbooks are my style of learning, so that's where I got it from.
I'm seeing a lot in the chat. I've seen it a few times, NVIDIA, and Matthew's asking very nicely. He said, NVIDIA, please.
Okay, so you want to look at SPCE or hit space?
I'm
just kidding, Matthew. I'm just kidding. We'll hit NVIDIA. All right, so I got some drawings here. They're probably based on daily.
Leah, we talked about books yesterday on the stream. There are a lot of good books when it comes to markets, technical trading.
Just start with technical analysis of financial markets.
Yeah, that one's really exciting.
All right, so NVIDIA got overbought at this high. Had a hell of a run. Now we're consolidating. We're taking a breather on NVIDIA. At all-time highs. So you don't have your trusty volume profile tool, excuse me, to tell you where speed bumps are ahead. Excuse me. But you can pull out the Fibonacci. This is the long position or Fibonacci. This one. Okay, so when anchoring your Fibonacci tool, in this case, we're anchoring it to the previous defined swing high, and then anchoring the second point to the ensuing significant swing low, which in this case is a pivot from a very short-term downtrend up into a really nice run on NVIDIA. And then you can just see why Fibonacci retracements is so helpful, because not only are these initial moves like well within the bounds of the spaces and the lines created by your Fibonacci retracement tool. You can see here some consolidation right when it breaks above the 0.786, but gives you an idea of when things are about to sputter out. Once it gets to that 2.68, you've had a hell of a run, and of course that lines up with some overboughtness status here on the RSI. So we are in a consolidation phase. And we're going to look for signs of breaking out from that. The easiest way to do this is just simple, really shorthand. You can just imagine someone with a chart that's on paper back in the 1940s using a pencil and a ruler and just drawing a sloping line of resistance here. And what we want to see is a solid green candle close above this sloping line of resistance to show us that we're going to hold this basic level, which here you can see that we're touching support multiple times. I don't know what the hell tool that was. We're touching this level of support here multiple times. So I want to see a solid green candle close to show me that this is some type of flagging or consolidation phase where we're not just hitting the top and selling off. And then following that, a break above this line on a solid body candle close, again, is going to be a very, very strong indication. However, we've done a lot of work here. We're looking at the daily, so over several days, just a lot of work has been done here. Folks got to take profit. The stock has to breathe. It's got to breathe. And you can see that reflected here. Again, always, always, always have your RSI open to get an idea of that. The longer this thing hangs out above this overbought status, the more likely it is we're going to take a little bit of tumble before buyers feel comfortable coming back in. And that's just the status of NVIDIA. So I would say the run has ended for the short to intermediate time frame.
Shoot.
But I mean, if you're still in NVIDIA and got in at a good price, it didn't sell off that much. Like, this is nice. This is a very tight top.
No, I only have NVIDIA in my long-term portfolios. My a Roth IRA, if you know what that is, Neil.
Never. No. What is that? I just use Robinhood.
Do they do that? It's kind of like Robinhood. I don't know.
Well, we have a very special guest to bring on today. He is the creator of a very, very cool platform that integrates a lot of this tarot card reading turtle bone in the dirt nonsense that I talk about into a single indicator called Go No Go. He's also an educator, or I'm actually not sure. I don't want to mess up his intro too much, but has participated in or led the education side of the CMT program, which is the thing that I'm going to start doing so I can get CMT certified, which is the chartered market technician program, which is basically like being a doctor of charts. It's legit, very, very cool. Oh, look, there he is. That's him right there.
That's so cool.
We're about to have this guy on right now to talk about technical analysis. So let's go ahead and bring on Tyler Wood. Hey.
Howdy, Chartner.
How's
it going, Neil? Long time.
Yeah, long time, man. How's it going?
You know, they finally reopened the barber shops. I lost my ponytail.
No one told me.
I love it. You know, Michigan, they haven't opened up yet. You can keep that hair growing.
Howdy, Chartner. So did I try to do my best. What is your status with CMT, and what kind of work have you done there?
Yeah, you did great. I've been with the CMT Association for about a decade. I'm the managing director there, and the organization's about 50 years old. So I heard you talking about the folks with their rulers and pencils and graph paper. Those are the people who got this thing started back in the late 1960s, and I get to talk to them all the time. Ralph Acampora, Phil Roth, John Bollinger, John Murphy, you name it. The folks who wrote all those great books, they're the ones who started the organization. So today, it's a big global nonprofit, and we do all the credentialing around the CMT program and talk to employers about hiring more people with CMTs, and talk to investors about putting their funds with people who have the charter and know how to responsibly manage risk. That's the main thing that we do.
I love it. Yeah, and I've told folks. I talked to JC Peretz a couple like a month and a half ago. I don't even know what it was, but I was like, yeah, I was thinking about just doing the CMT thing, and he looked at me like in my eyes, and he said, "Do it. Like it'll be one of the best decisions you ever made." Okay.
JC is quite persuasive. You know, he's got that South Miami sort of "I'll beat you up if you don't do it" way of introducing it. Yeah.
Yep. And he's bigger than me, so yeah. All right, guys. So let's get the likes up, guys. I don't know how the show is only at 42 likes. That's really weird and cringe. So guys, if you guys have a mirror near you, I need you to turn and look in it and ask yourself why. And hit that like button, guys, for all this great content, so we can keep doing it for you. So I was hoping, Tyler, that you would have a charting tool, and some picks that you could take us through the way that you're analyzing them.
I would love to. Let's see if we can do a little screen sharing. I'd like to select just one monitor.
Yeah, you can. It has all the same options as Zoom when you hit the thingy.
There we go. Boom. Yeah. Let me know when that comes up.
There we go. Perfect. Okay. Now we're looking at something very interesting here.
We don't have to start with cryptos. In fact, we probably shouldn't. Let's get to that later. I love to talk about credit spreads. How about you?
Let's do it. We love credit spreads around here. So
you mentioned you turned your back on the FANG stocks and you weren't really feeling it. They haven't been doing much for a long time. There's a lot happening under the hood in terms of rotation back to growth equities, and it all has an explanation in the credit markets. And we don't have to go back to business school and talk long bonds, but basically what's happening is that we're seeing the short end of the yield curve coming down, and it's flattening the credit spreads across treasury bonds. And when you get really sharp moves, in fact, let's come back to this in a minute. Let's just look at the let's just do the TNX for a second. Let's just look at the 10-year. So we had a pretty sharp rally in yields that kind of scared everybody out of growth equities, right? Mm-hmm. So if you think about institutional investors, they don't want a lot of exposure to these companies that have stretched valuations. And I'm using the F word We're talking fundamentals. I apologize. I know the shows get technical, but just so everybody understands where we're coming from, that sharp move in the treasury yields really scared people out of those FANG stocks. And they haven't been working great through, since last fall. But now we're starting to see rates come down. Last week, I think the low was at about 1.25. And we're back up around 1.3 this week, but it looks like a little bounce in a strong downtrend. Like if we just zoom into this, right? The classical technical analysis that you were just talking about, right? We've got a strong downtrend happening in yields, and sure, we're bouncing around. We're getting a little counter trend rally, but it looks like bond yields are continuing lower. So that's inverse to price. People are buying bonds, which are sending the yields lower. And now let's go back to that credit spread chart.
And if you guys have any question about this thing, I mean, this concept, these dynamics have dominated the past 2 years and more. So if you guys have questions about this, while we have Tyler on, make sure you're dropping them in the chat.
Love to take some questions. But really what we're seeing is bad for banks and great for these mega cap growth names. And so the credit spread, what we were talking about before, think about how lenders make money, right? They are borrowing on the long end and they are lending on the short end. Borrowing on the short end and lending on the long end, which means when you flatten that yield curve, Bank of America isn't making as much money on all of their lending operations. And in fact, if you jump in and look at individual securities, let's just start with the financials.
Yes, I was going to ask. Look, I called it, guys. You guys tell Luke Jacoby, because we talked about this. I told him the top came in. JC Press told me the top came in. Then I told Luke the top came in.
Yeah.
And there we are.
So financials, right? Everybody was super excited. We were writing about this in Go Research every single week and most days about just how exciting bank stocks were. All the cyclical sectors as that bond market moved. We were looking at industrials, building materials, bank stocks, energy. And energy, continues to work a bit. But a lot of those cyclical sectors have rolled over in favor of a return back to growth. And this right here is your financial sector ETF, the XLF, and it's just beginning to roll over. Now, not all ponies are created equal. So if you just look at Goldman Sachs, right, they got much less of a lending operation and a lot more investment banking, right? So they're holding on better than, let's say, a Bank of America. Get in there. Whoops.
The BAC.
Thank you. Right, so we're already seeing that sell-off coming in harder on Bank of America than it is on an investment banking group like Goldman Sachs. And if it's all right, Neil, I'll just talk for a second about what it is that we're looking at on this chart. So
please, yeah, let me blow up the chart too while you do that, so folks can see it closely.
So what you were showing folks earlier is exactly how we've all learned technical analysis. That's going through the CMT program and thinking about all the different indicators and tools that you can use to understand where markets are trending. And it doesn't matter the time frame that you're on, right? We're looking at a daily chart here. This could be a 5-minute chart if we wanted. It's all fractal. It works on all time frames. But what Alex Cole, the inventor of these go-no-go charts, and my business partner did was sitting at the elbow of all of these big institutional traders, sell-side analysts, buy-side PMs. They were frustrated with the complexity of their charts. So if they need to talk to a client about what's going on, if they're trying to explain their market view, they really needed to simplify. And so he built go-no-go charts, really not just for the institutional crowd, but to bring them to individual investors and retail traders, because when you have complexity in your chart, if you're looking at, let's say, 5 or 6 different indicators, maybe you have a Donchian channel, maybe some Bollinger Bands, you're looking at your moving averages for crossovers, and then in the lower panels, you've got some momentum oscillators. All of a sudden, it starts to really obscure price. You're not paying attention to what is basic human behavior being displayed in that price action. So the colors, right? If you think about all the information of having 10, 15 indicators on your chart, well, this actually has more information than all of that, but all tied together into a color-coded signal. So when the trend conditions for Bank of America are at their strongest in an uptrend, you get these strong blue go bars. And when things start to become uncertain, now we're not picking tops and picking bottoms, but as the trend conditions deteriorate, you move through amber, which is kind of a neutral, we call it go fish bars. Jesse Livermore used to say there's a time to go long, time to go short, and a time to go fishing. So this is our don't touch it. It's a hot mess. And then you get these no-go signals. And it's really as simple as that, consolidating and blending all of that information into a simple color-coded bar. So no-go versus go, pink and purple versus blue and aqua. And then what we're seeing on the bottom panel is a momentum oscillator. Same concept. Take a dozen different inputs, but you get a single momentum reading. And just like Neil was showing you, the divergences in an oscillator, a momentum indicator from price, right? As price is making new highs, right? We see Bank of America is pulling right up here, new highs, and we've got a lower high in momentum, and momentum's waning. And what's fascinating about this little tool that Alex built is that the zero line offers an objective view for support. So everything above the zero line is more buyers than sellers, right? We have positive momentum. Everything below this zero line is negative momentum, more sellers than buyers. And so when you think about how securities trend, we're going to come back and we're going to test this zero line. We'll have some exhaustion, just so you were looking at the NVIDIA chart. You'll have periods of exhaustion, and there will be pullbacks in momentum. But as long as the trend remains healthy, right? If you're thinking about long-term investments, or even if you're looking at 1 minute charts and you just want to think about holding it the whole day to capture that whole trend, every time that momentum oscillator comes back and touches the zero line, we're going to expect support, right, to continue with this uptrend. But when it breaks through, that's a serious sign of bad things to come. That means there are more sellers than buyers. So this break of the zero line, right, is it's a leading indicator, couple bars ahead of the trend change to amber, neutral. And then we've got color coded in here for volume too, just more volume relative to periods before that, dark blue. So we had negative momentum and then we had a surge of volume, and look what happened to price, right? That's not what we want to see.
So that is Bank of America. Now, Can you show us what this looks like for some of those growth names? For some of those big tech names.
You know what? Let's. I've got a kid, and let me tell you, I think half of every paycheck goes to the Walt Disney Company. And you think about the communication sector. One of the reasons I wanted to bring this up today is just we are just getting started, right? Walt Disney is broken out of a long-term what was support, then became resistance, right? That's that polarity concept you were talking about. We just broke out of this big resistance area, and now we're off to the races. And look at our oscillator. All right, so trend just hit go, just strengthened to that strong blue. Our oscillators on heavy volume busted out above the zero line, and now we're screaming towards overbought. And a quick note on overbought and oversold. Do you know Ralph Acampora? You've heard that name. Is
not personally.
Long-time veteran analyst, co-founder of the CMT Association. Okay. When I first got started, I was saying to Ralph, "Oh well, it's oversold. We should be buying, right?" And Ralph said, "Imagine you're at a pool party and somebody takes that beach volleyball and they submerge it under the water. You expect, it's gonna come back up, right? That's how everybody reads oversold. Oh well, once it hits oversold, it's gonna come rallying back." He said the danger is sometimes it doesn't. In which case, everybody at the pool party says, "Where the fuck did you get that beach ball, dude?" Right? Like, if it's staying down there, there's a problem. If you're at extreme levels of overbought, that's a good thing until it ends. So when you think about some of those tools, it's if you're a trend following investor, you're buying things that are pricier today than they were a week ago or a month ago or a day ago. But also with those RSI readings, when you're at overbought, that means there is exuberant buying, and you should be aware that is not going to last forever, right? Eventually momentum will pull back, but until it does, that's a really great signal. So I think you were steering people in exactly the right direction. You don't want to just dive into a position when you're already at those extremes. But if you're holding a position and you get to those extremes, don't sell just because you got overbought, right? You might miss that last third of the parabolic move.
Mhm.
Wait till it turns over. That's my diatribe on overbought.
It's a good diatribe.
And now you all know that Ralph Acampuro said, "Where the fuck did you get that beach ball?"
We get a lot of those beach balls in chat.
Yeah, I'll bet. So Disney, just starting to break out. Let's look at Facebook. Stick with the communications theme for a second. Screaming, right? And like we said, momentum will pull back. It'll come back to the zero line. We got to take a breather. This is just a sideways consolidation. And you see these little, let me zoom in on this. See these little green icons, Neil?
I do. The blue, I've been wondering about those little circles.
So for institutional portfolio managers, right, they're trying to beat their benchmark, and they're taking lots of positions, right? They have a diversified portfolio. A lot of things don't work. They cut their losses short. But in order to make up for all of that lost alpha, all that responsible risk management, they're losing alpha on that. They need to really outsize their winners, right? So they scale into positions. Every time you see this little green icon, that means we've had a resurgence of momentum. It's touched the zero line, found support, and momentum has come back in the direction of the trend. Okay. So we had some exhaustion. We're moving sideways. We came back down to the zero line, found support, but there wasn't really a lot there, right? We're on light volume. You see the light green. Now it touches again, second test, comes back. We're getting a volume surge, third test, and boom, off to the races. Look at that bar. What day is this? June 28th. So every time that a institutional PM sees this, porpoise shape, they see things consolidating, kind of spreading out over time. Market is digesting big gains. The question on your mind is, are we going to roll over, or are we taking a pause before we continue? And honestly, that's been the single biggest frustration, right? This is why the business is so full of regret, is that, do you get scared? Are you managing risk, or are you managing fear? Did you sell out of a position before it continued on? Or did you have such a high conviction in your trade that you saw it rolling over, but you're like, no, this is going to come back. And then you held it all the way down, right? So you need an objective view of, is this sustainable, or is it rolling over? And that's exactly what Alex created with these charts. You see it bounce off the zero line, boom, you're still in the game. Momentum is coming back in your direction. You're positioned well. Maybe double that position, add to your position size so that you can really expand those gains.
So it's just a very easy, based on institutional habits, scale in indicator.
Scale in.
Exactly. I dumb that down as much as possible, but that's sort of my understanding. And then the red arrow, that looks like that's following a really high spike on your oscillator.
Correct. And that's what we were just talking about. When you get to a momentum extreme overbought reading, right? It was great on this bar. We were at extreme. And the little red arrow says we've got a counter trend correction coming. This isn't sell everything and run to your bunker. It just means we're going to take a pause here. We're going to take a breath. Market's going to digest gains because momentum has come off this overbought extreme, and we're coming back down. And of course, price doesn't always, but sometimes confirms that momentum reading, as it did in this case, right? We came back a little bit, but now we're basically riding the zero line, right? Multiple touch points, lighter volume. I'm seeing a little more exhaustion here than what we were seeing in here. But if history rhymes, even if it doesn't repeat, for something like Facebook that has a very strong primary uptrend, that's been, it has a confirmed momentum move over months. It's a game of probabilities. My guess is we are more likely to consolidate and then take off higher again, right? And everything we talked about with the bond market, favoring mega cap growth names like Facebook, like Amazon. I mean, these are the ways to put the odds on your side. Let's take a look at Amazon. Right, a little choppier through here, but we're seeing the same long-term momentum up move. And look, we've just crossed this long-term resistance line. Look at that break out of the channel.
Beautiful.
Dude, look, the bigger the base, the higher in space is what Luis Yamato always says. And check that out. We're out of the channel, and now there's no overhead resistance. That means there are no holders of Amazon stock at these prices that are going to be looking to sell and get out and take profit. We have no overhead limit on this. At that point, you switch to your Fibonacci's and you do some extensions and see how far it could go.
I love this stuff. I love the way you're talking about this. So I have a question.
Yeah.
If I wanted to get these go no go indicators in my life, how would I do that?
You can do it in a couple ways. So if you're an active charting, participant, you do all of your own analysis. You can use the tools yourself. They're on TradingView, Wealth Charts. They're coming out on Stock Charts later this month, and about 6 other platforms over the coming months. But maybe you're like me, and you can't spend all day in front of the screen. You just want to rebalance your portfolio once a week. Alex and I write institutional research every single week. You can subscribe to that for $1.99 right through our website. And so then you get, these basic overviews, right? Top-down perspective. What's the credit market doing? Where do we want to allocate throughout the sectors of the equity markets, and a couple of individual names that look really good. The other thing you could do, premium research. We fire off daily ideas every single day. We've got a lot of folks who, the comments are really encouraging, right? The life's work that Alex has put into developing this through all of his decades at Bloomberg as a product manager and software developer are really coming to fruition. So you can do it in any of those 3 ways: once a week, every single day, or use the charts yourselves. And we're looking forward to changing the world. For those of you on Robinhood, send in a customer complaint ticket that they don't have go-no-go charts yet.
that works around here.
Yeah.
If you send a screen cap that you did that, Tyler Wood will give you a free compliment.
That's right.
Yeah.
And then,
and call you a chartner. Howdy chartner. Oh, what's that?
Charter. Well, that's the CMT level 1 curriculum. This is what you're going to be studying from.
I need to get. Where's the cheapest place I can get one of those?
Well, you can go to Amazon.com, or you can go to Wiley. Wiley Publishing does all 3 levels of the textbook. And what's great about Alex Cole, I've known him for a long time, not as a business partner, but within Bloomberg, we did all the trainings for their employees and for clients together about technical analysis. And then he became the subject matter expert for Wiley. So when you're studying for the CMT exam, Neil, it's going to be Alex in all 60 hours of video lectures teaching you everything you need to know.
I see his face right now on the website. It's fantastic. You guys are great. We are getting a question. How do we add these to TradingView? Just so you guys know, I dropped the link. It's go-no-go-charts.com. I dropped the link in chat there. But is there perhaps like an easy step-by-step process that this person could use?
Absolutely. So if you want the full suite with the oscillator, with the squeeze, which we didn't even talk about, and those icons, you head to our site. You can subscribe to monthly access. We enable you on TradingView, but we've also just created the free version of that trend indicator. You can find it under all of those custom scripts. Go No Go Trend Pro.
Yeah, I saw that.
Yeah, check it out. Take a test drive. See what you think. And there's tons of free educational content on our site, gonogoCharts.com. Videos, long form lectures that Alex and I have given, short 5-minute, market recaps, whatever your pleasure. And then you can also look at all the historical research. We post all that up for free for anybody who's interested in taking a look back at what we've been talking about.
Fantastic stuff. Tyler, thank you so much for coming on and taking us through the whole gamut of traditional technical analysis via the CMT sort of as a medium for that. And then the modern take where you're putting all of these together with Alex Cole's technology prowess. Tyler, is there any last thing that you'd like to leave folks with? Any particular ticker or sector? One thing that you think will make them more successful in the weeks to come?
One thing that will make you more successful in the weeks to come.
It's a good ass question.
You know, I don't really predict the future because that tends to get me into trouble. Didn't think the Cubs were going to win. I didn't think Brexit was going to happen. Definitely didn't think Trump was going to win. So I was 0 for 3. What I would say is going to help you the most in the next few weeks is have a disciplined process. So if you're trading throughout the day, what is your game plan in the morning? You wake up and eat your Wheaties? Do you stay hydrated? Do you have a process for your analysis? My recommendation is that top-down approach. So you start cross asset classes and then get into the sectors and then the individual names. And right now, growth is working.
Spoken like an original gangster, which stands for OG. Tyler, thank you so much for being here with us. I can't wait to have you on again, man. Super
Neil,
fun.
Great to talk to you. You're looking good, buddy. Flock of seagulls can eat their heart out.
That's what I'm trying to say. I'm going to update my LinkedIn. Thanks, brother.
Yeah, I'll see you soon, man.
All right, see you, Tyler.
Cheers.
All right, guys, that is Tyler Wood. CMT, been with them for about 10 years. Seriously in the program, seriously a great program, and has been partnering with Alex Cole, another person from the education side there, to create a really cool overlay, indicator, study, whatever you want to call it, for your charting tools to get an idea of where trend is going by tying together a bunch of these indicators that we tend to litter our charts with. So I'm really impressed by the work that those guys are doing over there. And here you can see I've got Disney pulled up on my chart. When we have guests, I hope you guys do this too. But when we have guests on and they're mentioning tickers and they're showing us what time frame, what indicators they're using, I follow along. That's someone asked, like, where did you learn technical analysis? Every single day on the show. Every time someone's on, we get 30 minutes of them just going through the way they look at particular assets. And I just try to copy it on my chart, and I always walk away with something. In this case, I'm using TradingView. I just went to my indicators and I typed go, no go, just as one word. And you can see that there's one here that's not locked, go, no go trend. That would be your free version of it. And again, this is kind of like what I was talking about. What ticker was it? Oh yeah, it was DraftKings. We looked at DraftKings at the top of the show. Now let's just look at DraftKings from the perspective of the go, no go trend indicators. And remember, I said we had this. If we just look at it, well, I don't want to change the chart type, but because I'm afraid I'll lose the colors. But we had a strong upward trend, and we started to reverse down, and you can see the colors changing, just very clearly telling you that this is healthy action. So when you're having this little sell-off period, you're not freaking out because it's still good colors, right? And then this is when you're starting to put together your different indicators to tell you that we are in downtrend territory. And remember, why hang out in a stock that's in a downtrend or a cryptocurrency or anything like that? It's best to have be going downstream instead of trying to swim upstream. There's always an asset that is an uptrend that you're able to trade. So guys, please hit that like button. I'm not sure if we got to enough likes for me to chug water.
Smash that like button in the face.
I love the way you say that. Let me see. Do I have my... No, not the United Nations. I just pulled up some United Nations.
I'm going to run some KPIs here to see where we are at on the like count.
Pull up that dashboard. Pull up our analytics dashboard. How are we looking?
We're at 92. We need 8 more.
Guys, do yourself a favor and hit the like button so we can keep bringing Get Technical to you, making trading that much easier, smarter, faster, better, harder. Hit that like button. What's up next?
We've got Moon or Bust, Benzinga's crypto show that focuses on altcoins. So if you want to learn about, I don't know, Baby Doge, Shiba Inu, who knows? Stick around for Moon or Bust.
Look at this one. Oof. Yep, I can't wait to be trading some crypto this weekend. Guys, Aquarius just said my name. Hi, Aquarius stocks. So yeah, guys, thanks for watching. This has just been another episode of Good Technical. Thanks for bearing with me while I was on vacation for a week in San Diego, skydiving, hanging out with my brain trust of college friends who make really smart decisions in life. And I just want to say thank you for tuning in. I want to say thank you to producer A Beat for being my rock, my stone, my life partner in the world of streaming. And then also, the water's not going to happen, bro, because you didn't get to 100 likes and we're already over time. Cameron Platts, is that your only comment this whole time? How many comments has Cameron had? 2. That's his second one. He's asking for the water. Insane. God, so selfish we can be. Guys, up next is the crypto show, Moon or Bust. So talking about making money with all them funky, fantastic crypto coins. Stick around. Thanks so much for tuning in. I'm Neil Hamilton. Follow me at Neil's Tweets on Twitter for more nonsense and good setups. Thanks for watching. Happy trading.